take a look at the market today. And of course, I want to dive into ETFs, the impact on what this might have on elections, and really the markets in general in terms of adoption. I'll break it down for you guys. My name is Paul Barrow. Welcome back into Tech Path. I want to open up with a clip today. This is from Tudor Jones. And really, it's kind of a scenario of you look at things, whether it's Bitcoin or gold, and where his position lines up, where the markets are going. Take a look.
Given all of the things you're saying, are you off buying gold and Bitcoin and
I think all roads lead to inflation. We're going to end up, but does all roads lead to inflation? Therefore, gold is a good investment. Is Bitcoin a good investment to you? I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities. I think most young people find their inflation hedges via the Nasdaq. That's also been great. It's probably some combination. I probably have some basket of gold, Bitcoin, commodities, and Nasdaq, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out.
All right, so as you can see, this is kind of the lineup of what we talk about here on the channel a lot. So I want to get one of the companies out there who have been very successful in the ETF side, and that is Hashdex. So joining me is Samir Kerbage, who's the CIO over there. How are you?
Hi, Paul. Good to see you.
Yeah, excellent. Well, listen, let's dive into a little bit about Hashdex in general. Some people may not be completely aware of what you guys are doing. I know you're a US-based company. You have offices in Brazil, etc. Give me a rundown of where you guys are right now.
Yeah, sure. So Hashdex is a global asset manager, a crypto-focused asset manager. So our mission is to provide investment strategies to help traditional investors to benefit from this crypto economy and this new asset class, which is based on the blockchain technology. So we founded the company back in 2018. We have multiple ETFs listed in different countries. We launched the world's first crypto index ETF in a partnership with Nasdaq. It's called the Hashdex Nasdaq Crypto Index. It's listed in Brazil, it's listed in some countries in Europe, and we're working to bring that type of product to the US.
So a lot of innovation around that. ETFs are starting to move much more fluidly here in the United States, obviously with what's happening with, BlackRock, Fidelity, etc. And very successful in terms of inflows over the last couple of weeks. Very, very positive for that. When you look at the U.S. market compared to the rest of the world around ETFs, is there a similar appetite? Because prior to the ETFs in the United States, I remember when Canada first launched the first ETF out there for Bitcoin, there wasn't as much of an appetite to where we're seeing billions of dollars flowing into that. What about the rest of the world, what you guys are seeing?
Yeah, so it's important to see this on a relative basis, right? So every country that a crypto ETF was launched was the most successful launch of the ETF history in that country. So that happened in Brazil, that happened in Canada, that happened in some countries in Europe. So what we normally see is that there's a big demand for crypto ETFs overall. The US has been basically restricted from investing in crypto through ETFs until early this year, and we saw like a record inflows into Bitcoin ETFs specifically in the beginning of the year. So we believe this is a natural demand that this ETF is attending to, okay? And we believe this is only going to increase because it takes some time until this ETF comes to the hand of investment advisors and institutional investors. So this first wave that we saw is mostly from self-directed retail investors and hedge funds, okay, which is normal to see in other markets as well. It takes 1 to 2 years for investment advisors to start to come into a new ETF, and that's what we expect is going to happen with crypto ETFs over the coming years. So it's been a very successful first year, but we believe this is only the beginning.
So you look at the number of investment advisors. This is something now that we're seeing here in the U.S., both by BlackRock and even Fidelity, of recommendations out to their advisors that are saying you should be looking at this as a long-term opportunity. You look at what BlackRock has been able to do with their own real-world asset and securitizing tokens out there with things like what Securitize has done with them, partnership on, of course, Ethereum, and what we might see in RWAs. Is there anything that you guys are doing in that direction?
So this is an area that we keep track on. Okay, the biggest opportunity that it's in the market right now is around stable coins and money market funds. This is because we're seeing like huge demands for a dollar-denominated digital wallet. Okay, so we see huge demand, especially from emerging markets. And the next natural step is, if I have a dollar deposit on chain, how can I have a money market fund so that I can get some income on that dollar, right? Instead of just losing value over time, especially in a high interest rate environment. So we believe that the natural trend towards tokenization is starting with stable coins, then going to money market funds, then we can see all the instruments. And this type of demand is picking up pretty much in all countries. We've seen this in Europe with the new regulatory regime, the MiCA. We've seen that in Brazil. Brazil is developing a stable coin, basically a digital central bank digital currency, and a blockchain network to tokenize assets. So this is a big trend everywhere. We see real world assets being tokenized into blockchains. Hashdex is exploring some of those alternatives based on each jurisdiction.
So interesting, because I know Brazil, part of BRICS, the fact that they're going in with a CBDC, that'll be interesting on some of the reports that we've been talking about here on the show, because BRICS, of course, is doing a big meeting right now. Could line up into some new monetary shifts. I want to look back at your Nasdaq Crypto Index. This is just a quick look at some of the assets you're holding within that. That's Bitcoin, Ethereum. Many people will see that. Solana, XRP, top performer here on the index. Cardano, Link, AVAX, Litecoin, etc., all the way down to Polkadot. Are there plans to expand this index further into some other assets, or is this pretty much, or maybe launch other indexes similar to this one?
So this is a great question. So we have multiple products in different geos, depending on the regulatory regime. So in Brazil, for instance, we have 7 ETFs because the regulatory regime allows us to have more crypto assets available, more assets within an index. In Europe, we have 2 ETPs. In the US, we're working with the SEC to introduce one new ETF tracking the Nasdaq Crypto Index, holding mostly Bitcoin and Ether. So the Nasdaq Crypto Index is a passive investment vehicle. Okay, so it is basically managed by Nasdaq. It has a quarterly balance process in which new assets might come in or be excluded from the index based on very stringent set of rules. Okay, so the asset must be supported by regulated exchanges, supported by regulated custodians, must have a minimal liquidity threshold.
Right.
And so there's a set of rules, just like for the Nasdaq 100 or S&P 500 index, they need to satisfy those rules in order to be included. And if the assets satisfy the rules, it is included. If they are not satisfying anymore, they can be excluded. So the Nasdaq Crypto Index is started with 5 assets. And right now it has 11. So it's an evolutive index.
Yeah. So you're saying you could grow it even further as more assets start to flow into. I mean, I think of things like SUI. That's a good example. One that's really climbed the ranks, probably meets those criterias. SUI could be one that drops in there as well.
Yes, that's the beauty about a methodology like this, because it's evolutive. So if the market evolves to have a lot of different assets with representation, with market cap and with liquidity, satisfying the institutional grade eligibility criteria that's defined on the Nasdaq Crypto Index, they can be included. So there's no minimum number of assets, there's no maximum number of assets, there's no caps. It really is designed to reflect the market as it is.
Yeah. I should say SUI, because people get on me all the time about the pronunciation of SUI. Let's go into some other things that are happening out here, and that is ETF options now potentially supercharging Bitcoin, especially when you look at liquidity, and that's a new opportunity. Many people look at that, and you look at the current state of the U.S. elections. Trump, of course, leading the pack right now. One of the things that was stated in this article here, main drivers right now, rising odds of him winning the election, and possibly a technical rebound for Bitcoin price. Now, we've seen a little bit of movement in Bitcoin where it bumped almost 70K this week and has retraced a little bit, but we could see some activity here again before the election. How are you guys tracking this here in the US? Obviously, Bitcoin is a global asset, but the United States does have a fairly significant amount of Bitcoin that drives interest, at least from investors. What are your thoughts?
No, definitely. So the US is the main driver of like Bitcoin related events that can be positive for prices, right? It was back then in the introduction of the Bitcoin ETFs and the demand that it generated. We're also looking at how liquidity conditions are going to evolve in the coming months as the Fed starts dropping interest rates. That can be very positive for prices. And that's irrespective of who's going to be elected, okay? Mm-hmm. Like Tudor Jones said, like, we don't see an environment where the trajectory of the debt, the U.S. debt, is going to become under control. Doesn't matter who's elected. Yeah. So that tends to be a very positive tailwind for crypto and Bitcoin specifically. And regarding the election specifically, what we're seeing is that the market is generally very optimistic about a regulatory regime for crypto if Trump is elected. Okay, so what we expect to happen is the news about a potential Trump election might be super positive for the prices in the short term, especially for assets, for other assets beyond Bitcoin, because Bitcoin has a very, very clear regulatory regime in the US already. But when you look at Ether, they have some clarity. Now there are ETFs, but when you go to Solana, XRP, and all the other assets, there's a big uncertainty right now. So I think that they tend to benefit the most from an open regulatory regime for crypto, and that's what markets are betting for Trump. If Trump is elected, then we might have a better regulatory regime. But what we believe is that the most important thing is look at the Congress. So how the Congress is going to be composed in this next cycle, okay? Yes. And how this Congress to look into regulation. That's the big important topic to look in the coming weeks.
Yeah, we've covered that pretty extensively for many of you guys watching right now. Go back and watch some of our videos on the congressional hearings around the FIT bill, also around the stablecoin regulatory alignment. There is a lot happening. I don't necessarily, we're kind of in that lame duck session right now coming up, but I don't know that we'll see something happen before the end of the year, but I do hear from a lot of the DC types that we are going to see some pretty accelerated movement in DC on this. I wanted to get your opinion on this. This is gold versus Bitcoin ETF inflow by the year. Year one, I mean, you can kind of see this is a pretty crazy chart. Let me zoom in on that for you. You can kind of see 20 billion right there. Year one, outpacing gold dramatically. My question to you, Samir, can this hold that kind of trajectory for growth? Do Bitcoin ETFs continue to pressure into the market like this? What are your thoughts?
Yeah, we believe so. And basically because there was a lot of demand that's been held up in the last 10 years for a Bitcoin ETF. Okay. Now we're living in an environment where ETFs are way more popular than they were 20 years ago when the gold ETFs were introduced. And this is we're only talking this $20 billion is only self-directed retail and hedge funds. And when you see like options coming in, derivatives trading, increasing liquidity, institutional investors, pension funds starting to allocate, this is going to probably keep the momentum forward over the coming years. Of course, at some point it needs to stabilize, right? It's just not, we can't just expect those to keep
numbers
increasing
for sure.
For the first 3 years, we believe that this is going to be way more significant than we saw for the gold ETF.
Well, think about that. For the first 3 years, I mean, we're at 20 billion right now. Year two was barely what, 3.5 million for gold. Year three, I mean, they really didn't crack 5 billion until year four. So this will be an interesting trajectory if now granted, year six was the most amount of inflow that we saw with gold, but intriguing that you say that. Well, one thing that is going to have to grow with these market is going to be the liquidity. And if you look at one of the things, this was Bitwise CIO talking about stablecoins and what they are going to look like in terms of their value, 1 trillion in AUM rising. I think he was saying this was by 1 trillion by 2026. I mean, we're literally a year out from that right now. That's a significant amount of potential here. Granted, if we get a stablecoin bill in the United States, that will probably spur a lot of this growth. Do you think that's a low number? He's talking about this being a conservative number. What are your thoughts?
Oh, so it's a great question. It's very hard to estimate something like this because there's so many variables to map out. But what we can see is that stablecoin adoption has been growing exponentially in emerging markets. Okay, if you look at markets like Venezuela, Argentina, Nigeria, Lebanon, Turkey, you have a huge stablecoin adoption. And that's because it's very hard to access the US dollars in those countries. They have a lot of capital control. And with a stablecoin, you just need an internet connection and you're done. So it's way more easier. It's way easier for payments and for remittances. So that has been a big driver of stablecoin adoption. We haven't seen too much stablecoin adoption in developed markets, in the US, especially in the European Union. And that's because banks can do it. They just can't do this. And now we have MiCA in the European Union. So that's going to start to be effective next year, in January next year. All the big banks we speak to, they are preparing to offer solutions, either like stable coins or access to stable coins. They're all working in some kind of infrastructure to offer access to stable coins. And we have potentially a new regulation in the US giving clarity for banks started to adopt stablecoins. So that can be a big catalyst for growing this market.
Yeah, I think this is going to be one of the key intricacies that we have to watch for is, one, the stablecoin bill once it gets, I think it's the one that will get passed through Congress. That, of course, is going to help a lot of the U.S. banks, but I think also companies are going to start to put this on their balance sheet and start to look at that as an opportunity. That, of course, is all going to be benefiting much of the digital asset ecosystem. Listen, Samir, we're going to keep an eye on what's happening at Hashdex, so we'll definitely have you back on to talk about ETFs in the future, but thanks for coming in today. We appreciate it.
Thank you so much, Paul.
You bet. Excellent. All right, you guys, if you're not in the Diamond Circle, make sure and get in that right now. It's our own private membership group, and we got some big things happening over there, so join. All you have to do is click the link down below. And hey, listen, if you guys want to follow me on X, that's another place where I really engage, so it's just @PaulBaron. We'll catch you next time right here on TechPath.